Let's keep that conversation going. Bring in our next guest who says the Fed is unlikely to ease as quickly as the markets seem to believe. Let's bring in RockCreek Group CEO Afsana Beschloss. Afsana, it's great to have you back. I know the market is penciling in cuts, and a lot of strategists at least argue that that's unlikely. But why do you think it's not going to happen this year, or do you?
Great to be with you today. I think, I'm reminded of what Alan Greenspan has told me and others in the past, which is nobody really knows the direction of inflation numbers. So, Fed chairs and Fed staff also are watching similar things as we are. No question, JOLTS report today is a very big factor in what they're looking at, and the numbers that are coming out later this week and next week will be important indicators. But I believe that, you're not going to see the big recession that some people have been expecting. And so I'm in the camp that there will, at this point at least, unless we have very big surprises at the end of the week and on Tuesday, a 0.25% hike in May.
I was going to say, you mentioned JOLTS. We had ISM yesterday. We had PCE on Friday. We got Bank of Australia now. I mean, I guess if they do hike again, does the justification for it get naturally thinner? What could they possibly say? Would it be about some reflation in goods or certainly energy?
I think we're still seeing that unevenness in the labor markets, right? We're seeing, for example, you just talked about how many people the banks are laying off just as we speak. We also are seeing service numbers still being relatively strong. We're still seeing wage growth in certain sectors. We saw oil prices spike yesterday. Obviously, that did not spook the market, but that could go on not just because of the OPEC rises, but also because China is starting to increase its consumption of energy. So manufacturing, no question, and the ISM numbers were pointing to weaker manufacturing and weaker input prices. The other side is we're seeing this huge innovation going on in our economy with what's happening on OpenAI and with what's happening with generative AI, and in the sustainable areas where there's huge investments going in. So we're seeing that in the U.S., we're seeing that outside the U.S.
So, Afsana, given your view and the fact that you aren't as negative on the economy, how are you positioned right now? I know you previously liked energy a lot on the sustainable transformation theme. Where are you now?
So we continue to look at those trends, and inflation is not gone. I think trends like things like food and ag are continuing to be areas where you still see inflation. So we are still continuing to look at those because there's demand in those areas. I think on the S&P, as we have been following, the market is testing different levels. We opened the market today being stronger. We obviously had the reaction to the JOLTS numbers. This will continue in the next couple of months. We're going to have ups and downs. We are going to have, obviously, deposits are leaving the smaller banks, going into the larger banks. So dislocation will be with us. Nonetheless, I think that the underlying part of the growth in the economy, both here and the fact that Europe did not decline as much as we expected, the fact that China is picking up a lot of the slack, is going to be generally positive, Sarah.
I was going to say, I'm glad you mentioned Europe. We got producer prices there down for 5 straight months. You mentioned the rebound in China, although a lot of that, at least tourism, appears to be geographically contained to the mainland for now. Yeah. I just wonder, yes. I mean, the bull argument for the rest of the year, a lot of it is just about how the global economy has remained pretty resilient.
You're absolutely right. And Europe pointing out to even places like Spain and Italy, right? Who would have expected, with everything going on with the banking sector, that they would be interesting spots in the markets right now? Who would expect that places like the Czech Republic, would be interesting places to invest in right now? So I think there are points of dislocation in this market, and you just have to keep on looking for them.